Good evening, everybody. Whoops, I was supposed to put up that picture. That's the 55 Oldsmobile. All right. It's pretty darn cold up here in the Northeast. And so this is that's my house. Yeah, part of it anyways. This is where trend analysis becomes a lot more simple, knowing the simple rules of what we should be looking for as far as signals and where they're trading below the T line. The fact that we were trading somewhat sideways the other day, right up until this point right here, didn't have anything real definite with the Dow, and at the same time we didn't have anything real definite. Well, we had something more definite with the NASDAQ in the sense that it didn't trade back below the T line. However, when they gapped down on the NASDAQ and started selling off hard on the Dow, that told us the T line obviously was going to be acting as resistance, and that we should probably be at that point closing out long positions and adding short positions. So that was kind of the criteria. Now, were there still stocks going up when this market was rolling over? Yes, but the probabilities become much greater that you're going to make a lot more money in stocks, obviously, that are going down that have good sell signals going on. So we'll get to some of those. But let's take a look at the commodities. Crude oil to me is just a nothing chart at this point. We're in this slow downtrend with it bobbing between 92 and at this point probably 99. Probably going to see some more downside in crude oil. Let's see, natural gas has been going up exponentially till today. But notice what had happened in this trading. Look how far away we are from the T line and the 3T line. So anytime you get that far away, you get ready to start taking profits. And let's see, what else? Gold. Gold is in this slow uptrend still. Looks like a big fry pan bottom setup with a little gap up starting. Probably once it gets back up into this level, getting closer to the top of the fry pan bottom, then you have to watch to see whether they can get through the 200 or not. So right now, if I was trading gold, I'd be long, but just on the basis that it's not going to go up real fast. It's in a fry pan bottom. The other side, silver, is just flat as a pancake. It's not really going anywhere. So there's really not a whole lot of energy in the metals. Interest rates, bond prices coming up a little bit. Interest rates should be heading down. Looks like your first kind of resistance area is going to be right about the same place that the 200 will be coming into this chart. Let's see. Cocoa has a good chart. That's a nice little breakout. Notice how they did it with a gap up and a gap up. So that tells me more than likely, if I can make this small enough, that this consolidation, little scoop type pattern, is going to take cocoa back up here, which would be right back into the trend trajectory that it was on. I think that's about all in the only thing that's moving consistently right now is feeder cattle. As long as it stays above the T line, you stay with it. But there's charts like this where if you can't tell which way it's going, you get out of the trade. I was long, and then it pulled back, got out, was ready to go short, but it didn't break this level. So today it was telling us you didn't want to be long or short in this type of pattern. So the reason I point out hogs is because if you see something in one of your stocks or any position and it's looking like this, You say, hey, man, I don't know what it's doing. Get out of it. There's plenty of other charts that are going to look like this. Just close out the trade and go on to something else. All right, some of the ones that, even though the market was selling off hard, there were still stocks like Pran just coming out of this little scoop, cradle-type pattern. All you can do here is stay long. Now that you're in the overbought area, you start putting your stops at the previous day's open. The price shouldn't come back down through that level. And there's ones that, this is one of the hardest things that most people have, and I say most people have, that I always had, was we closed out, let's see if we can do this. We closed out HIMX the other day, or Friday when it closed down here. That was not a good sign. Then today they did a kicker type signal back up above the T line. We were buying back again. So a lot of people, and I say a lot of people, myself always, if I sold down here, I wouldn't buy back because, boy, would I look stupid if it turned right around and I had to get back out with a loss. But now I know when I can see a signal and a pattern, there's much greater probability that I want to get back into that trade and at the right time in the right direction. Now, there were some that were holding up well until today. For example, MAC was a good trade, but it did a doji on Friday right smack dab on the T-line, which made this very simple. It had to open positive and trade positive to stay in it. If it started trading down, that's not what you wanted to see, especially with stochastics starting to roll over. You needed to close out this position. And at this point, I would have probably used the doji's low as a stop, that it shouldn't come back down through there. If it did, it was coming down through the T-line and through the previous day's low trading. That tells you the bears are in control. Now, ARIA, Friday had a nice big day. Today, notice what it did. It pulled back most of that gain, but bounced right off the T-line, and they didn't do it up here in the overbought area, which makes me kind of suspicious. Tomorrow, if they open it to positive and start taking it positive, you want to be buying back because that's going to create that bullish doji sandwich. But there are times when you get right back out of a trade that doesn't work. Today was recommended buying ROVI, R-O-V-I, if it traded positive, which it did. It had a nice bullish candle. But at the end of the day, it came back down through the open, which is where we would put our stop, because if it came back down through there, it's telling us multiple things. Number one, that this is not going to be a good-looking candle with a big shadow to the upside. Number two, if it's trading back below the open, that tells you the bears have taken control. And number three, if it came back through the open, it was coming back down through the T-line, which told us they weren't breaking this out. We were now stuck in this little sideways channel, close out the trade, and go on to something else. HIMX, I don't have a short-term target. I know that this is wave one, which went from 10 to 15. So they could move from 14.5 to, let's say, 19 up in that area. When you say take profits, does that mean sell all? Yeah, if you're in that position, if you'd bought ROVI today, I think take profits. Which one were you referring to, Andy? Whoops. Yeah, no, take profits when you're in a situation where you've got profits, obviously. But I can't remember which one we were looking at. But MAC might have been an example. That if you got a good profit in here, it needed to be trading positive or opening positive and trading positive to stay in it. If it closed back or started trading back below the low, take profits, meaning have you gotten in here, get out of the trade. Oh, yeah, for Pran, Oh, pshaw. We're praying right now. We know we're in the overbought condition. We know we're in a strong uptrend. We know we're starting to move away from the T-line as well as the 3T. We want to have someplace safe, and right now safe would be that if they could come back down through today's open, that would tell us the bears are in control, and more than likely they're coming back to test the T-line. Okay, and VRS was another example. VRS had a very nice chart yesterday, but it closed back at the T-line, which meant they better open this positive. This one should have been closed out today because we failed to get it up above the T-line, and now they're further going away. This one should have been closed. That's not a pretty chart. Okay, what else we got here? PTCT. This was a big belt hold signal. And remember, a belt hold wipes out a lot of the sellers. So right now, if they open this positive, they've got the potential of doing a doji sandwich. Why? Because they took out a lot of sellers here. They're doing a J-hook type pattern, and you've got the potential of a doji sandwich setup. And if you had a doji sandwich setup, that means you're definitely in a J-hook pattern. You're probably going into wave 3. RBCN. This is why we like to know what the characteristic or the results of a signal or pattern should be. We've got an obvious J-hook pattern. We've got a doji after a down day. Let's make this bigger. That opened at the above the previous day's open, so it gapped up and did a doji. And our very simple rule of a doji is if it opens positive, we want to be buying immediately because it's going to move in the direction of a doji, which means if it does that, we're trading positive, that means we're probably going to break out through this level. And if we're breaking out through that level, that means we're confirming our J-hook pattern, which means this should go up another $2 or $3 on a positive open, not necessarily in one day, but that would be what our next target would be. You should have closed today. I forget which one it was, but as soon as you saw that it was not trading positive, number one, and number two, you could see that the market was not going to be trading positive. Yeah, you close it out. Yeah, 359, 59. All right, let me take NYNY. Nice little rounding, slow curve, bunch of dojis, big fry pan bottom. This one you can be buying with the anticipation that they're going to break it out to where it moved before, which is up here in this area. So that's a decent profit. And let's see. All right. CCJ is one of the mining companies, I think. That's Cameron. This one's setting up very nicely. You've got that little gap down doji right onto the T-line and then bouncing back up, making this a scoop, slow curve, breakout, J-hook pattern setup. This one you want to buy on positive trading tomorrow, and just don't let it close back below the T-line. And Electronic Arts. Notice what they've done here. They've had a kicker signal, which usually means a very strong uptrend. The pullback is dojis. And remember, dojis means indecision. So essentially it's telling us visually that this pullback is very indecisive, not anything where anybody's putting any pressure or a whole lot of pressure on the sell side. And then we have another gap up today, or positive trading day. We're right here at the breakout level. We can obviously see a J-hook type pattern. So this puts us in a high probability trade that if this opened positive, if this was wave 1, wave 3 is going to come up in here, probably testing the recent highs. Sprint. Well, that's soybeans. Sprint. Bullish Harami right here on the 50-day moving average, right below the T-line. This makes for a very conservative, safe trade. But if they open this positive and start trading up through the T-line, you want to be a buyer, then all you have to do is use the T-line as your stop. So you've got a very short stop loss area with a big upside potential being wave 1, wave 2 going into wave 3, which could be the same magnitude as this move right here. Oops, need a... Excuse me. And this is going to be on the recommended list tomorrow. This is why it's good to have a lot of eyes in the chat room looking for good chart patterns. This is ORMP. Notice what it did today. A morning star, doji gap up through the T-line, J-hook pattern setup, stochastics curling back up. This one's going to be very simple. You want to be buying this one on positive trading, using the T-line as your stop. But the probabilities, again, with your best friend start, is that we're in wave 3, which should be about the same magnitude as this move, which looks like it was about a 20-point move. So if it's a 20-point move, that should take us up pretty close to $40 on this one. So this makes for a very good stock trade as well as a good option trade. And, so the slow curve is one that we like, because if you get a slow curve like this, this is the type of results that can be expected with a high probability. And PACB also showing the slow curve breakout. Now PACB looks good because notice where it opened today, above yesterday's or Friday's open and went this way. Now we've got the potential of a doji or a flutter kicker. That if they open this positive tomorrow, we're going to have a strong day moving in the direction of how they open it. And coming out of this fry pan bottom slow curve, strong price move, expect a nice next price move to be of the same magnitude as this. So it just, again, puts you in a high probability situation. Will you have a big move like this? Hopefully, meaning that's what we anticipate. But at least if it opens positive, we know we're moving in the right direction, that we should have a profitable trade. What was the one before? I don't know. Oh, live. But live's already, this was just for illustration of the slow curve, and then it took off big time. At this point, with a doji in the overbought condition, gapping up, you put your sell stop one tick below the low of today. If it comes back through there, obviously they're coming back to test the at least the T line. So we did PAC, but we did see, did we do? Yes. And another one that looks good, SMCI, because it came out of the slow curve, moved up nicely, pulled back. Now we've got the doji bullish confirmation. This one should have a potential of another move of the same magnitude. Let's see. I've got Ryan on here somewhere. I'll jump to it since I see it. Ryan did a kicker signal gap up. So this one you can be buying with the worst case scenario of 45 degree coming off of here, heading up to the 200-day moving average. Okay. All right. Let's see. What else we got here? Oh, there was Ryan down there because of the kicker signal. Again, that was the same reason why we were buying HMIX today, because with the kicker signal is high probability we're going higher, and if we're going higher, that means we're breaking out into a wave 3. Kicker signal is the strongest signal in the candlestick arena. Now, when you have something like this, and you start getting sell signals, hanging man to close below the T line, just go with the probabilities that if you're closing below the T line, you want to be out of a long position and potentially looking for a short trade. That's the same thing we saw in ONVO when they did an evening star signal closed below the T line. They were in a downtrend. So OXBT today closed just below the T line. Now, the only reason you would hold on to this one is because it was an indecisive trade, so it's either doing a wedge, or if they open this lower, then we've got a bearish doji sandwich setting up, that if it opened lower, close out the position. The worst case scenario is it turns on you and comes back up, you can always buy back in. Because even if you had to pay 30 cents higher, we're not in this for 30 cents. We're in this for the next 3 to 4 or 5 point move to the upside. So, get out when it says it's time to get out, and if this opened lower tomorrow, it would be time to be out of this trade. CYTR is another example that they needed to close up, but the fact that he did a bearish engulfing signal and closed back below the T line told you want to be out. Not only do you have a sell signal, stochastics are heading down, and they're closing below the T line. That's a high risk situation to be in if you're trying to trade long. Close it out. There'll always be another buy signal at some point. Let's see. And KNDI, another reason we got out of this the other day was we had a close below the T line. The next day they popped back up doing a bullish harami, which made it very simple. If they opened up positive, we'd be right back in, because that would tell us this uptrending channel was still in progress and they were staying above the T line. The fact that they opened it lower and started trading down told you two things. Number one, you didn't want to be in there long. And number two, this was probably now going to become a good short, because they kind of gapped it down doing that little trend kicker. There's probably more downside to it, as we saw. And so, again, anytime you see that close below the T line, close out the position. That's not the direction that something should be going. That's the ISN. Should have been closed out. And BIDA was a kind of an example the other day. After a big doji gap down and a close below the T line, that was pretty much telling us that unless they could open it positive and start trading positive, the bears were now in control. As you can see, that's where it's heading. And XRS was another one, just like, did I already do that one? XRS, oops, I did that. Well, that's not the right one. No, XRS is a good example of a doji gap down, and notice they could never get back up above the T line. That's one that you want to start going short and staying short when you see the sell signals, or see it confirm with a close below the T line. And XONE, same example. Had a big shooting star doji gap down. All you have to do is stay short until you see a sell signal or a buy signal and a close back up above the T line. So again, once you know the specific signals, right up here, this was telling us a lot of information. There was lots of indecision going on. And then they told us that they'd made their decision and they retracted their decision and then told you which way they were going. Anytime you see a sell signal and a gap, that tells you they've moved in that direction with great enthusiasm. SHOR, that kicker signal to the downside, you can still be shorting this one because you saw that they didn't support at this level. That tells us the next possible level is down here to the 200-day moving average. Oh, Shazam. Notice the dumpling top. This one's very simple. They've had a gap down doji. If they open this lower, they're moving in the direction how they open it. With them opening it already slowly rolling over, you're going to start getting other people piling on. And if this opens lower, there could be a good hard push to the downside. Let's see, what else did we do? Oh, we shorted Go-Go today because Go-Go opened right up on the T-line, or just above it, and then started selling off. So this makes it very simple. If we see the sell signals and they open positive, all you have to do is put your sell stop at the previous day's open or the previous day's close or the previous day's low, because if it comes back down through there, that's telling us this whole signal pattern is still working, which would be working because we got the added benefit of seeing that this downtrend was kind of resisted right up here at the top of this trend channel. So again, once we can put as many pieces of evidence as possible telling us that the bears are in control, what's happening here? For example, there's that flutter kicker to the downside on JKS. Today it opened lower and started coming back up, but then it faded. So this is, I forget what they call this. It's kind of a in-neck or out-neck pattern. If this opens lower tomorrow, you can be shorting immediately because that means they're still taking it down. This was just a little bounce during the uptrend, during the downtrend. TSL, same scenario. It came up by, what the heck's going on here? It came up to the 50. If this opens lower tomorrow and starts trading down, which would be a high probability because they're not anywhere near getting into the oversold area yet, then if this opens lower, they're still taking it down. Why? Because the kicker signal back through the T-line told you there was going to be a lot of force to the downside. Let's see, CDE, left-right combo, bearish breakthrough of this little trend channel. This one, you want to stay short until you see a buy signal. If this one opens lower tomorrow, you want to be shorting it because more than likely your next target is somewhere down in this range, coming off the bottoms. And CONN, as we can see, when they tried to take it back up, there was only one day they could get it back up above the T-line, and then it did an evening star signal, which tells me they're heading back down to the 200-day moving average. And we don't know whether it's going to support there or not. So this one you can be shorting with a high probability that you're still heading down. ENT, even though it's more of a conglomerate, that's rolling right over. This one can be shorted on weakness. MDCO. Notice the failure. And anytime you see a T-line doji and they move it one way or the other, especially gapping it one way or the other, that tells you that's the way they're going to go. And if you're below the T-line, there's still a lot more downside. We were long ZLTQ the other day. But then notice how this little pennant formation needed to stay above the T-line. The fact that they closed it below the T-line told us to close it out immediately. Now you have a doji. If they open this lower, what's that telling you? They're going to move it in the direction how they open it, number one, which means they could be doing a doji sandwich. Number two, which means your downtrend is going to be fairly strong because the results of a doji sandwich is further follow-through. SEAC, there's your dark cloud smack dab on the 50-day moving average, close below the T-line. This one you stay short until you see a buy signal, which would tell me that if this is wave one, wave three is going to come down into the $8 range. And CTRP, same scenario. Notice how we had that little Doji gap up, doji gap down, couldn't get above the T-line. Now we've got a wave 1, wave 2, wave 3 in progress. AG, if you can see something where you know everybody else is watching, and this is why I always say, watch to see what it does once it gets to that next resistance level. We've got a shooting star, left-right combo, close on the T-line, they opened it lower. That pretty much tells us what we want to know. They failed here at the 200. They're taking it back down. Where? If you can see that you're in a downtrend, more than likely they're ready to bring it back down to the bottom of this downtrend. That's a good time to be shorting because you know it's in a downtrend, number one, and it keeps failing every time it gets up to a resistance level. And TRLA, another one that's in this downtrend, came right back up to the resistance level, which is this downtrending channel. Doji, gap down, couldn't hold the 50. Where is this got the possibility of going to? To the bottom of the trend channel, which could be way down here. Let's see here. Krispy Kreme. Slow rollover. This one you want to be shorting on any weakness, because if this is wave 1, wave 2, going into wave 3, and wave 3 has started because they didn't hold at this level, I would suspect you could have a, let's see, this went from 26 down to 18. Another 8-point move from here would take you down to 10. And things like MODN, we can see we've got this slow curve, and where is it sitting today? Right on the 50, which tells us if they open this lower, the 50 is not acting as support, but you've got a good potential of coming back at least down to this level, and if we make this big enough, we'll see why that's a substantial move. That's taking you from 1050 down to 750. That, to me, is about a 40% move to the downside. So anyways, the fact that this market started cracking at least gave us the inclination to be out of some of the long positions that weren't looking good and get into a few short positions, so that at least we're heading in the right direction at the right time without a full boat of long positions going the wrong way. We were starting to unload and start going short on some positions as we could see things rolling over, because the worst case scenario is they did support and blast this way. You come out of your short positions and add long positions. So this is just kind of giving us an inclination they were failing, and now when they broke the T-line hard, it told us where do most people sell. They start panicking, selling at the bottom, and we're getting down here. I would suspect here's your first target, here's your second target on the Dow. Okay, so with that, I guess tomorrow night we're going to do a member session on the benefits of spreads, because we've talked about spreads quite a bit, and apparently I need to go into more detail why a spread is a much better, much more effective trading mechanism than just buying calls or puts outright. And then Saturday, I think, is this Saturday? We're going to spend 2.5 hours for those interested of looking at how to scan, how to set up your scans, and then how to go through and cultivate your what you've come up with your scans to figure out which are the best trades for the next day, which means we're going to go through kind of a quantitative list of signals and patterns that show us which ones are the best. No password will be same as the members' password, since for members only. White time tomorrow. Yeah, white time when it's snowing hard. It will be at the same time as tonight, starting at 8 Eastern Time. Saturday we'll start at 9:30 Eastern Time and go to about noon. I know that's a little bit early for the West Coast people, but can't help it. Which platform for scanning? We'll probably be using a combination of Metastock and TCNet, only because I'm the most familiar with those. But all the scanning techniques we use are applicable on all the scanning softwares. You still scan Wiki? Yeah, I scan funny things all the time. Yeah, I still do scans with TCNet. And as most of you know, Ed C in here can do formulas for almost practically any of the software programs. Saturday will be recorded. TCF2. I don't know what that means. Okay, kicker signal. When a stock open positive, then sells off, closed below the open, is it still considered a kicker signal? Cat, for example. Which day are you looking at? A kicker signal. Kicker signal is like what we saw today in HMIX. Whoops. Oh, maybe I goofed up there. Maybe Cat had a different. This is a potential flutter kicker signal. Gapped up above the previous day's open. It's still an ugly chart unless they open this positive and start breaking out. So as a flutter kicker signal with an indecisive trading day, if it opens positive and starts trading positive, then you can buy it because that's your flutter kicker signal. We'll be starting the long term. Both Pat and Tim are out this week at a convention, a training convention somewhere. So probably this weekend we will start getting at least one long-term pick out for everybody, and then the process of how we evaluate for those long-term picks. Okay, yeah. That's things like ORMP is not necessarily a true kicker signal. It's more of a doji, but technically it opened, the doji opened here and closed down here and then gapped up. So it is technically a kicker signal, but more visually it's a morning star, a strong morning star, because anytime you have a doji and they gap it up on the third day and close more than halfway up this candle, the stronger they close it up, the higher the probability you're going to be in a strong uptrend. And the fact that they close it above the T line makes it a very strong chart. But again, yeah, technically, in this type of signal will show up on your kicker scan process because it is technically a kicker signal. Will the scans work for Fidelity Active Trader Pro? I'm sure they will. You just have to put the formulas in, and it's basically all the formulas we use are so simple that if you can say the formula, then you can build the formula. And you don't even have to be a formula person. It's just some very simple steps. Okay. Yes, Peg, they will be relatively generic. Again, if you can write down the formula, if you can write out the formula saying day one opens or let's say day two opens below the open of day one, and day two closes above the. I said that wrong. Yes, I can't even say the formula to say the formula. But if you can say the formula, you'll be able to put a code to it very simply. Um, let's see. Yeah, the 3T and the AT will be available again. That's when Tim gets back. We'll have that ready for people somehow. Where would you put the stop on IMX where it opened today? It shouldn't come back down through the open. Okay, let's see. Hold off on your individual positions until we tell Jim to do the double line. Okay, guess that's it. All right, so Jim, go ahead and do the double line. All right, and then 6.84 seconds, do the next double line. Okay. All right, so we can stop the scrolling. Array. This one, all you can do is stay long. And remember, on a long-legged doji, it needed to move or open in the direction that it was going to open in the direction of how it was going to move in the direction of how they opened it, which they opened it positive, which kept everything above the T line. And Rambus, that's a good gap up consolidation. It's still moving, and now you've got a scoop type pattern. I wouldn't be afraid to be buying this one on positive trading, using the halfway point of this candle as a stop. If they close it back below that level, you're right back in the trading range again. IO, this one you can get ready to buy, but I'd rather buy it once it breaks through the 50, just so that resistance level is out of the way. Soda, this one was a short. We recommended this as a short today, but as you saw, it opened and immediately started trading positive. It still will be a short if they could come back down through this level, because that tells you this little rollover is starting to go into effect. On the other hand, if it does, I don't think that wasn't quite a bullish Harami, but if it opens positive and starts trading positive, I wouldn't buy it until it does get up through the T line. NWBO, this one has to open positive and trade positive tomorrow. I wouldn't want to see it open lower after a big long-legged doji. Remember, that's usually tells you there's going to be a possible change of investor sentiment, so it needs to open positive tomorrow. ARWR looks like it did a left-right combo closing right at the T line. Makes this very simple. If it opens positive, we know where our next target is. It's coming up off the bottom of the channel. It's probably going to the top of the channel, which means you got a potential move up into this area. And First Solar tried to come back. It's right here on the 200, but I'd be a little bit leery in the fact that we're out of the overbought or oversold condition and starting to fade back down. This is going to move in the direction of how they open it tomorrow. Ford was pulling back. If you were a trader, you should have been out of this one a couple of days ago. Whoops, what happened here? When it gapped down through the T line. So as a trader, you should be out of this. As a long-term investor, I wouldn't be buying it yet. I'd still wait for another strong buy signal. We are still holding on to a lot of this long-term, but it wouldn't be a buyer of it right at this moment. Google, as you can see, broke down. This one, if you're short, you stay short until you see a buy signal. The obvious is that it's right here at the T line. I'm sorry, at the 50. So see what they do at that level. That was Google. Amazon, same scenario, kind of a doji type day right on the 50. If they open this lower, they're taking it lower. They need to open this positive, trade positive for any possibility of going back long here in the near future. Scotty traded down. It tried to come back up today, but notice it bounced off the 20 and did a doji. We're still in the uptrend, but it definitely needs to open positive. If it opens lower and does a bearish doji sandwich, there's going to be more downside to it. OXBT, this one, to stay in it, has to open positive tomorrow. If it opens lower, close out the position. Bona has been getting whacked here for a while. It tried to do some bullishness today, but notice where it failed, right at the T-line and headed back down. If you're short, you stay short. Again, this is with a doji gap down. That tells you there's probably still some more force to the downside. I wouldn't doubt if they're going to go down to the 200-day moving average. SRPT, after that initial breakout and a close below the T-line, you should definitely be out of this for two reasons. Because this is the candle that told you the bulls were in control, and now they've closed it more than halfway down that candle. That tells you the bears are back in control. You don't want to be in this position anymore. And Angie, stay long as it stays above the T-line. ARIA backed off quite a bit, but used the T-line as support. This one needs to open positive and trade positive, which I would suspect a doji sandwich on this one. Not a doji sandwich, a stick sandwich. And VSB, that's a nice breakout after a left-right combo. This one, expect a 45-degree coming off of here. And BCRX, this one with the evening star type signal and the gap down, you want to be short. I would suspect your next target is the 50-day moving average. And target, stay short until you see a buy signal and a close above the T-line. At this point, if I was short, I wouldn't want to see it trade back up above today's high. Visa. Visa, stay short. More than likely, it's going to touch the T-line. We're still long CCRN. It's staying above the T-line. Used it as support today. Prego. This one, if it opens lower tomorrow, you can go short. To go back long, this one needs to see a close back up above the T-line. KERX backed off today, but it was because they were announcing a new stock offering. So that doesn't change investor sentiment. All that was a knee-jerk reaction. It stayed above the T-line, but like anything else, it has to open positive and trade positive to stay in it. Otherwise, investor sentiment has changed. And GDX back below the T-line after a spinning top type day. This one is probably coming back down to test the 50. Potash. Notice where this failed. Right at the 200. You stay short until you see a buy signal and a close back up above the T-line. MTW. Stay short. You had your Doji, Hanging Man, bearish engulfing, gap down. You stay short until you see a buy signal. Hershey. Another one where if you're going to be in any direction, you want to be short, just be aware that the magnitude of this, the movement of this stock is just, this is an institutional trader. Not a whole lot of activity or a lot of volatility in it. Stay long. All the REITs seem to be doing good right now. And NIHD. Well, let's see. Are we right at break time for this darn software? Let me see if. Well, pshaw. There we go. Apple, I still wouldn't be long or short this one right now. As you can see, it's in a wedge sideways, not going anywhere. And then even Apple is down 24 points tonight. NIHD needs to open positive and trade positive to consider staying in it and or getting into it. Apple, I think, was trading down here and around the this range, which means they're still coming back down to the bottom of this trend channel. Now, at that point, you can see if they can start buying again, buying off the bottom of the trend channel. CY, whoops, S.CY, one of the software semiconductor companies. This one I wouldn't be long or short. As you can see, it failed at the 50 with a bearish Harami. It's kind of moving sideways. There's nothing to this chart that would make me want to be long or short. Apple's right now at 506. That's down even more then. $506 way down here. Geesh. Let's see. S.CLF. Another one where you stay short at this point. I would put my sell stop at one tick above today's high. If it comes through there, you want to be you want to cover your short position. SUX. What about SBUX? It's in Starbucks. Starbucks is still in a slow downtrend. It had the opportunity to get back up above the T line, but as you can see, it did a left-right combo today, bringing it back down. DDD tried to come back up, doing a hammer type signal. Not there yet because we're not quite in the oversold area yet. The Qs, same as the Dow. I'm sorry, the NASDAQ. If it opens lower, it's not supporting at the 50 tomorrow. S.FCX. This one, all you can do is stay short until you see a buy signal. At this point, if you were short, use today's open as your stop. It shouldn't come up through that level. U.S. Steel, stay short, same scenario. Shouldn't come up, if you're short, shouldn't come back up through today's high. ZLCS, this one you can be going, no you can't, it's below $5. This one you should be out of because it came back down through the T line. Aflax, that's probably going to, they're probably targeting the 200. Watch what it does once it gets to that level. And M, whoops, non-fat. And M, you stay short on this until you see a buy signal. Now, if this came back up through or opened positive tomorrow, you'd cover your short position, but you'd get ready to reshort it if they wouldn't get up through the T line. And TSN. This one you can short if they open it lower. That means they're bringing it back down to the 50. XYL has been getting beat up. This one you stay short right now. If you were long, it should have been closed out when it closed below the T line up here. We did Ford, GNVC. All you can do here is, excuse me, I need a drink here. Yum, yum. GNVC, just stay long. You do have a bearish engulfing signal. If it does open lower, search trade lower, I take profits, and then you just put your buy stop back at where it opened. ALQA. Well. RNA. This one. This one needs a little bit of more help. Did a little bullish engulfing. It needs to open positive tomorrow to get moving. If it opens lower, I'd be out of the position because that would definitely tell you it's moving sideways. RSOL. Big bullish engulfing. This one you can buy on positive trading tomorrow, completing or confirming the J hook. CarMax stays short till you see a buy signal and a close back up above the T line. ULTA, another one that you can go short on if it opens weaker tomorrow. Wouldn't be a buyer until I see it definitely close above the T line. Let's see. ROIAX. That's one's not coming up on this one. Yeah, I think we did the 3T line a few weeks back, didn't we? XOMA, this one you should have been out. Notice that you had the hanging man right there at the T line, which meant if they opened it lower, you needed to be out of it immediately. And that will also, I would have used, worst case scenario, you use the low of the hanging man as your stop. And NVAX, this one you should have been out of today with it gapping down below the low of the doji and trading down. That tells you which way they were taking it. GM looks bad also. Yeah, but it might be getting close to being a situation where you can be buying it if it bounces off the 200-day moving average. Game, all you can do here is stay long until you see a sell signal. At this point, I'd put my sell stop at today's low. Shouldn't come back through that level. And UCO, that one's still going to be in a downtrend, I think. S.UCO. Yeah, this one is still in this downtrending channel. Diane, if you turn on CNBC or Bloomberg, usually they've got the scrolling stuff going across or things up on the top of the screen that show you what the futures are doing. Pre-market futures show you what gold is doing, shows you what the Asian markets are doing, that sort of thing. So, yeah, I usually have CNBC on all the time, but I usually have it on mute just to see what the especially before the market, see what the what all the indicators are doing before the market opens. Okay, let's call it a night. Again, we'll be back here tomorrow night for anybody interested in the benefits of, or the dynamics of call spreads, just to show why that they work better or get better results than just buying calls or puts outright. All right. With that, I'm going to go see if there's any more deer eating all the corn out front in the dark. So everybody have a good evening. We'll see you in the chat rooms tomorrow.